Welcome back. In this section, we are going through some of the key instruments for financial management. In the previous section, we had our focus on describing the financial management in terms of planning, controlling, and administrating. In this section, we are going to focus on the financial manager's main tools and friends, like profit and loss statement, balance sheet, budgeting, and cash flow. We call them financial statements in general. Each of these are briefly introduced in this short video. It is obvious that this will definitely be a scratch of the surface, but this should help you to understand what we are talking about when we are talking about profit and loss statement, balance sheet, budgeting, and cash flow, and so on. In the first section, we talked about those tools a bit. As said, accounting tries to clarify the complex financial data of the organization. Accounting provides and legally must provide some data that will make information comparable between years and between organizations. How this relates to financial management. Some of the data that financial management process needs are looking to the future or trying to estimate the future, as we learned in the previous section of this course module. So before controlling, there is planning, right? Looking to the future. But almost as important as the future is the past as well. Although it is true that some of the data looking to the past is not very helpful, as it basically only reports what has happened previously. But it helps you to understand the future as well. Financial managers should definitely understand what profit and loss statements or balance sheets tell us. We will also look for the budgeting, which is looking for the future as well. How is profit and loss statement and balance sheet related to the budgeting and cash flow estimations? You will find the answer with this video. We hear all the time that the past is not telling about the future, but when budgeting, it can be very, very helpful to look the past figures as a base for estimating the future ones. It is also useful to budget on the same format as the profit and loss statement. Then the comparing these figures is easier as well. So let's start with the profit and loss statement, or we can call it as also income statement. As said before, and the name tells us, it will show the profits and the losses of the organization's funds. Back on the days, everything was made by hand. I mean, when trying to make the financial statements. This meant that a lot of mistakes were made, but also that it was more demanding for bookkeepers because basically nothing was checking their work's consistency. Nowadays, everything is made with softwares, financial softwares, and it helps a lot. Even if you never have done bookkeeping, it is possible to provide profit and loss statements. As long as you understand what is profit and what is loss, you are pretty much well done with the softwares. Here you have a profit and loss statement in the short version. So there are two types of it, short and the long version, but this is the short version. Unfortunately, this one is in Finnish as it is our organization's one. If this would be corporation, it would show the net sales in the beginning of the income statement. Now it's just income. As you can see, it's plus marked as the income should be. After that, there are expenses which are divided to 4 different lines. And I want to remind you that this is about sport organization association. The first one is the operating expenses for providing the operating income. So there is income and then there is expenses for providing the operating income. The other one is human resource or staff expenses. It needs to be on its own line. And the third one is depreciation, amortization, and reduction in value. So these ones are the assets that are not related to money. Depreciation, amortization, and reduction in value. And the fourth one is other operating expenses. After that, there is this first summarizing line, which shows that the net income and net expenses for basic actions are minus 1.6 million euros. If there would be no more other incomes, the association would be bankrupt and dead quite soon. Now I remind you that these are the bookkeeping records. Depreciation and amortization are, for example, not money that will leave companies or organizations' bank account. It is just a record showing that organizations' funds have lost their value. Then there is line fundraising. It is divided to two lines, profits and losses. In this short version, this is as simple as that. Fundraising losses or fundraising expenses basically include the expenses spent to provide the fundraising income. So in this example, year 2022, there were no expenses, but as you can see, last year there were. As a financial manager, you would probably question, how is that possible? This is basically all the short version of income statement can give you. A brief understanding of the present time period and some comparison to the last time period, in this case, a year. Then there is financial income and expenses. How much income did the financial assets provide income, for example, investments, or bank interest we had to pay, or interest that bank paid for us? Basically, you could say, how much did we spend to get funds and how much we were paid for our funds? After that line, there is governmental support, which is 1.273 million euros. Then putting together the income, expenses, fundraising, financial income and expenses, and the governmental support, the last and the most important line is showing a profit of 3,850 euros and 13 cents. So that is the most important line in all the financial statements, especially in profit and loss statements or income statements, as you can call them as well. This is the short version of the profit and loss statement. Now you can see a part of the long version of the profit and loss statement. As you can see, it is now split into all the bookkeeping accounts. It is obviously a lot more informative than the short version. Financial managers should look more deeply on this longer version, this one, because it shows a lot more info. It does not make any sense to go very deeply through this, but this shows the enormous difference of the data that the short and the long versions give you. You will have a short practice to do some calculation process with the profit and loss statements, and you will find the information from the course model discussion part. Let's look for the balance sheet now. As we learned before in the first section, the balance sheet shows us the assets and liabilities. To keep it simple, it shows what you own or someone owes to you and what you owe to someone else or are using that someone else owes. So what you own, what you owe, what someone owes to you. Assets. It is split into two different parts, non-current assets and current assets. Non-current assets are long-term, and you could say that these assets are having a life more than 1 year. Long-term investments, land, Long-term investments, land, and property are examples of non-current assets. Current assets include the cash equivalents, accounts receivable, stock inventory, prepaid liabilities, and other liquid assets. These are all short-term assets, so current assets. Those are the ones you own or someone owes to you in short term. Let's see the other side of the balance sheet. It includes the capital, reserves, and liabilities. Equity, which is also called capital and reserves, includes financial assets from the past years, also called returned earnings or losses. And the next line is profit or loss from the past financial year. Provisions include the provisions for pensions, provisions for taxation, and other provisions. So basically, something that you will owe someone in the future. Creditors include the payments that we have received in advance and credits that have been invoiced but not paid when the financial year have ended. In corporations, there are also owner's equity stated in the balance sheet. It includes contributed capital from the owners, so the money or something else that the owners have put to the company. While in associations, there are no owners. Sport organizations are owned by no one. So the retained earnings belong to the association itself, not to their owners. In corporations, the retained equity is owner's equity. This is only to understand the difference between the associations and corporations. Balance sheet is way more complicated than the profit and loss statement. At least I think it that way. Once again, balance sheet shows what assets we have and what we owe to someone. Let's not go very deep on balance sheet, but you should understand the basics. So, go through this video as many times as possible, as long as you learn the very basics. I would also encourage you to learn by doing. So whenever you have a chance to take a look to the balance sheet, use the chance for learning. And do not hesitate to ask from someone else more experienced or someone who has gone through many of the balance sheets. Let's talk a bit about budgeting. Everyone hopefully understands that budgeting is planning the organization's future, right? Quite obvious. As we learned previously, budgeting can be made in different time perspective and also for different sectors of the organization. Usually, at least yearly budget is made, but it could be useful to budget in shorter periods as well. Using a different organizational divisions in budgeting usually helps a lot when trying to understand where the money is spent. This is practical whenever budgeting, but also whenever trying to follow the budget. This is also dependent on the organizational financial volume, but also about the organizational structure. So you can split your organization in different divisions and do the budgeting for the different divisions and then put together. So you better understand the money flow situations and where the money goes. And you can also do the budgeting on a yearly level, which is it is the easiest way, but it doesn't give you so much information. So the budgeting should be probably made on quarterly level or even monthly level. But these are also always dependent on the organizational financial volume, but also about the organizational structure. In some organizations, the structure is quite simple. You provide one type of service and all the profit and losses are related to that service or product. But usually it's more challenging. Let's have a sport organization example. You produce physical activity services for kids, youngsters, and adults. So it might be useful to keep on track of each of these separately, right? This is quite obvious, I think. The budgeting and profit and loss statements should be comparable. So whenever budgeting, budget on the same list of bookkeeping accounts as you have on your profit and loss statement. And I mean the long version, not the short one. Budget and profit and loss statements should be comparable. It makes your life so much easier when you're financial manager. Budgeting is always estimating and evaluating the future. So it basically never goes exactly as planned. But good and very practical way when budgeting is to look for the past. It helps you to understand and estimate what might happen in the upcoming year as well. This is especially good when the organization's actions keep pretty much the same from year to year. The better you know your organization's actions, the better you can do the budgeting. So, few pro tips here. Consider the time frame you make the budgeting. Is it yearly, quarterly, monthly, or even shorter periods? Consider how many different organizational divisions you have that need their own budget. How well you understand the organization's actions. If well, it is easier to budget. What can you learn from the past? How much variation you have in organizations' actions? And use the same bookkeeping accounts as in the profit and loss statement. Then the last part of this section is the cash flow. Cash flow is one of the essential tools for financial managers. It basically means the estimation of how much cash we have at the moment and how much cash flow is coming and going in the near future. This is even more important if the organization is suffering a lack of cash. So it's a way to plan as well. This is easy to understand if you take an analog from your own life, own personal life. It is kind of the same as budgeting your own money, but still a little bit different. In your own budget, it is usually actually about more or less about cash flow management. Today, I get my salary or governmental support or some kind of income. Some of the money you get, you could put into your savings. It is budgeting, but also cash flow. Then you decide to spend some of the money to the groceries. Quite obvious. It is probably budget to do that, but it will have a negative cash flow effect on your own finance. Here is a very short cash flow example. This is about main account of maybe you. So, in the last day of March this year, 2023, your balance is 300. It's plus 300. Then next day, you will get the salary 1,000. Then you put to the saving account 100. So it's a minus. Then groceries up 50. And then you pay your rent 1,000. And then you have a debt and you do the debt payment 300. Now you can see that the balance, the cash flow balance is minus 150. It is a bit different from profit and loss statement because you put the savings, which is something that you still own, but it's affecting your cash flow. Negative balance estimated when looking for the cash flow. Now we either need to generate more income or negotiate some due time for rent, for example. This example is really simplistic and really simple, but it shows you the idea of the cash flow. If we have not enough money in the bank or in cash, we are facing a trouble with the finance. Even though the budget could be different, but the cash flow shows something else. When you try to make the budget as precise as possible, the cash flow estimation is easier. The cash flow is a way to handle the flow if someone is not paying in time or some other problems occur. Cash flow is a quite simple tool, and the main idea is to follow usually short-term flow in order to keep on track and make sure that the cash is flowing in the right direction. This was a scratch of the surface on the profit and loss statement, balance sheet, budgeting, and cash flow. I hope you find this video useful, and you should go again through this video if you have problems to understand it. Now, you will do few true and false questions and do some calculating practices after this video. Further information about those true and false questions and some calculating practices you will find from the course section. Thank you and see you soon again.